Running a business takes courage, creativity, and consistency, but at some point, every business hits a moment where extra capital would make life a whole lot easier. Whether it's covering cash flow, grabbing new equipment, expanding, or simply giving yourself breathing room. Today, we're breaking down exactly how to get a small business loan, what types of funding make the most sense, how to qualify, how much you may qualify for, and how to improve your chances of getting approved. If you're a business owner who wants clear, simple guidance, let's get started. Which type of business loan is best for you? Before choosing a lender, you need to know the types of loans available. At Real Capital, we offer all of these, so the goal is matching you to the right product, not pushing you into the wrong one. Term loans. A term loan gives you a lump sum up front and you repay it in fixed monthly payments, best for equipment, business expansion, renovation, debt consolidation, large predictable investments. The pros: lower interest rates, higher borrowing amounts, predictable monthly payments. The cons: stricter qualification requirements, require stable revenue and decent credit. SBA loans. These aren't issued by the SBA. They are issued by lenders, and the SBA guarantees a portion of the loan. Best for long-term growth, major expansion, acquisitions, real estate. The pros: lowest interest rates available, longest repayment terms. The cons: paperwork and underwriting take longer, require stronger financials. Real Capital pre-screens you up front so you don't waste months only to get declined. Business lines of credit. Think of it like a credit card for your business. Borrow only what you need, when you need it, and only pay interest on what you use. Best for cash flow gaps, emergency repairs, seasonal slowdowns, opportunity buys, staying prepared. The pros: highly flexible, revolving reuse funds as you pay, great safety net. The cons: possible draw fees, variable rates may fluctuate. Equipment financing. Use this when you need equipment but don't want to drain cash reserves. The equipment itself is the collateral. Pros: keeps cash in your business, own the equipment instead of renting, often easier to qualify for. Cons: only for equipment purchases, down payment may be required. Revenue-based financing or cash flow financing. Fast, flexible funding tied to your business's revenue, not traditional credit requirements. Pros: fast approvals, great for businesses that need money quickly. Easier qualification. Cons: higher cost of capital, best used for short-term needs or opportunities. Where should you apply for a small business loan? There are 4 main sources, and Real Capital works across all of them. Large banks. Lowest rates but lowest approval odds. Slower process, require strong credit and financials. Credit unions. Often friendlier than big banks. Programs vary widely by state. Harder to qualify for business credit. Online lenders. Fast approvals, flexible underwriting, higher approval odds. Rates vary based on risk. SBA-preferred lenders. Best long-term financing, lowest rates, longest underwriting times. Real Capital sits in the center, giving you access to all the major funding types with one application and personalized matching to the lenders most likely to approve you. You don't chase lenders. You don't fill out 5 forms. We match you to the right product right away. What do you need to qualify? Each loan type is different, but here are general guidelines. Credit score: 600 plus or 680 for strong bank SBA options. Revenue: at least 10K to 20K a month for most loans. Time in business: ideally 6 to 12 months. Bank statements: no negative balances, no overdrafts. Cash flow: enough deposits to support repayment. Documentation: driver's license, bank statements, business returns for large loans. Profit and loss statements if required. Real Capital helps you organize all of this up front so you're not blindsided during underwriting. How much can you qualify for? It varies by revenue, cash flow, type of loan, industry, time in business, credit strength. Real will pre-qualify you before submitting you to any lender so your time isn't wasted. How to increase your chances of approval. This is the part most business owners get wrong. 1. Strengthen your credit. Fix errors, lower utilization, create a clean repayment history. 2. Avoid overdrafts and negative balances. Lenders look for healthy banking habits. 3. Request the right amount. Don't ask for $100K if your business is only bringing in $10K a month. 4. Build business history. Even 6 months of clear revenue gives you a major boost. 5. Apply through real capital instead of applying blindly to random lenders. We help you match the product and lender most likely to give you the best and highest approval chance. With real capital, you get a partner that understands lenders, underwriting, and approvals, and knows how to help business owners get the funding they need to grow. Whether you need a term loan, a line of credit, an SBA loan, equipment financing, or fast working capital, Real has options for every stage of business. Thanks for watching, and if you're ready to explore your funding options, reach out anytime. We're here to help you grow.